Hey traders, welcome to the Transaction Trading channel. In this video, we'll see how to understand the exhaustion candles and what are the common patterns that you can see and how to identify these exhaustion candles. But before that, few things about this channel. This channel is all about price action trading. That means we don't use any indicator for tradings. We use volume, moving averages, Fibonacci, and candlestick psychologies. So if you're interested in those contents, please subscribe to the channel. Also, guys, I have a Telegram channel and a Facebook channel that you can follow for a daily content and to visualize the daily trades. Links are in the description. So let's understand what exactly is exhaustion candle. So the exhaustion candle, in simple terms, you can say that any candle that is overextended or that does not correspond to the normal market situations. What I mean by that is if the market is overextended for a small period of time, let's say if you are trading for A to B trade range and the market, or you can see that the candle over there is overextended. If I go here and I'll show you the market movement, this is an uptrend, keep going on, keep going on again. Now, if you notice this arrow is an overextended. This is a uptrend market, but if you notice that in the correspondence to the previous candle, this arrow is an overextended. Now let's understand in terms of candles. So if I say in terms of candles, so this is again an uptrend and the market keep going on and on like this. There was some kind of change of polarity or something like that, and market is keep going on and on. Some wicks and other candles are also there, and this you can see that this is an overextended candle in terms of these candles. So I'm not saying that this candle is a normal candle or an exhausted candle. I can't say this in terms of by watching like only 2-3 candles. You have to visualize this extended candle or an exhausted candle in terms of last few 8 to 10 candles. Here I'm experiencing the candles in terms of like 10-15 candles, but in general, an exhaustion candle appears maybe like after 6 to 7 candles. So if you are watching a daily chart, you will see that after 6 or 7 candles, there is always an exhausted candle. That exhausted candle has a different kind of meaning where it appears. So do not get confused with the breakout candles. Breakout candle will also look like similar like exhausted candles, but they have a different characteristics. So there are 3 different ways to understand the candlestick exhaustion. And those 3 ways are called volume, looking at the volume and understanding the candles, looking at candlestick psychology with volumes, and the moving averages. So you can combine all of 3, or you can combine only 2 like candlestick psychology and volumes. These are powerful patterns that can help you understand the candlestick exhaustions. So I'll explain all these 3 in this video, but before that, let's understand some of the candlestick math for exhaustion candles. So this is an exhaustion candle here. So these are the common patterns that you will see for an exhaustion candle. And if you notice, these are the candlestick math that you can relate to. So this is a Marubozu candle. And if you break that candle in a shorter period of time, let's say if you are, let's take for example, you are trading in a 5-minute chart pattern. So if you notice the 1-minute chart pattern or a 30-second chart, so it will be something similar to this, that this Marubozu was divided in this type of characteristics. Again, same goes for this Marubozu. This is a bearish Marubozu, and this is the ultimate result here, the hammer candle. But you can see that this is a buyers and sellers congestion here. So let me tell you one more thing here. When the exhaustion candle happens, if it is an uptrend, there is a mismatch between buyers and sellers, and buyers are more positive. And when it is a bearish market or a downtrend, then sellers are more positive towards their market and they want to take the market down. So that's the overall scenario for the exhaustion candle, and that's the whole math of exhaustion candle. So this is a coming back to this topic. This is an hammer candle. And if you break that hammer candle in shorter forms, so this will the ultimate result. Same goes for this, and finally the spinning top. So this is something called the combination of hammer-like characteristics and a Marubozu. So you can understand the candles by looking at the nature, and this is a spinning top. So I'll share this PPT along with you guys so that you can take it for as a reference. But I'll quickly move to the chart now and show you how to understand these with the help of volumes, with the help of moving averages and candlestick psychology. If you are not using volumes and moving averages, that's fine. If you are understanding the candlestick psychology, you will be able to understand the exhaustion candle itself on its own without using any volumes and moving averages. But let's go back to the charts and see what we can understand with the help of candles now. So I'm in Euro USD 1 minute chart. You can obviously check this and backtest this strategy, or it is actually not in a strategy but understanding. You can actually test this on any time frame, 1 day chart, 4 hour chart, or any time frame you are comfortable with. So let's understand with the basic candlestick psychology. Market in a downtrend. This is a complete downtrend, right? So this is also an exhaustion candle. See that the market wanted to go down, but after this candle there is a kind of consolidation that is happening here, and once this candle is again raised, it is kind of like acting as a resistance line here, right? If I go here and show you one more example, probably let's go further, or maybe this can also be considered as an exhausted candle. So why this is an exhausted candle? See, market wanted to go up, but it went up, right? It went up, but it failed for some time. Like if we are watching for 1 minute chart, it failed for 3 4 5 minutes, not more than that. So if you are seeing in terms of days, it will be failing for 5 days, 6 days. But if we are talking in terms of 1 minute, it is failing for 5 minutes. So market then had to break up. So this is a break up candle. So this broke some kind of resistance here. So this is an exhausted candle. Again, let's go forward. Let's go forward and see if we are able to identify any exhausted candle. Let's go back. So this candle can also be considered as an exhausted candle. Why? See, this is a huge candle, right? And market wanted to go down again from here, right? But it could not go down. Why? Because in a very short span, market covered or shorted was like market covered a huge distance when going down. So there was some kind of retracement. So whatever was the candlestick math, consider this: if the market move swiftly towards up or down in a very short period of time, there will be an exhaustion candle and the market will retrace from there. So this is what happened over here. In a very short period time, market covered like huge pips, right? And once it failed to go down, market retraced. So these are some kind of common patterns that you would see, or the exhaustion candles, with the help of candlestick psychology. Now let's understand with the help of volumes. So let's minimize this. So when you are seeing a volume, there is also a different kind of scenario that you have to look out for. So exhaustion candle with volume has two meanings. One, where you would see a volume spike, and candle small, could be small, candle could be big, but you would see a volume spike. The other would be like volume is down, but the candlesticks are huge. That is also saying that market wanted to go up or down, but there is no pressure from buyers or sellers, and that's why the market is exhausted or market is resting over there. So let's understand that psychology here. So what happened here? You see, this is a volume spike, and this is a candle. What happened after this? So this candle was not broken above. So the candle after this is it could not break above. This again broke down. So the market went down from there. So this is an exhausted candle. How do I know this is an exhausted candle in terms of this very 3 4 candles? See this volume spike. And what happened after this? Market was sleeping, 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 and suddenly market wanted to go up, right? And it again went down. Now after this red candle, market wanted to go up. But because of the seller's huge pressure, there was a buyers, right? Buyer wanted to go up. So buyers pushed but could not go above. And now what happened? Sellers were very high and they forced the market down. Now after this candle, there was some kind of buyers also, but they could not force the sellers to like dominate them. So it went up for 2 3 more minutes, but after this candle they could not break above. After this candle you would see this is a initiation of seller's entry now. So this is one way of looking at it. So let's go another way. Let's understand in terms of uptrend. Let's see. So now you are seeing here this is a volume, right? Now, please do not consider this as an exhaustion candle. This is a initiation of the uptrend, but this is not an exhaustion candle. So this is an exhaustion candle here. So this candle is an exhaustion candle. You can consider this as an exhaustion candle. Why? Because after this candle, market could not go above for some time. Market will go above if there is an up thrust or upward movement, but it could not go, and market consolidated over there. So you can see that the market is consolidating in this range. So if I show you, so this is the range, and this complete is the range. Now what happened? This range is like 4 5 minutes. Market is trading here. It broke above, broke down, and immediately after this candle, they broke above. So whatever the candlestick psychology is there, but this has happened. So this is also an exhaustion candle. Now let's see one more. Okay. Yes, right here. This is also an exhaustion candle. One of the candle that I was showing in my PowerPoint. So this is an exhaustion candle. See the candle here. Market could not go above, and immediately the sellers were active now and the market went down. So like 10 15 minutes or maybe 30 minutes market went down. So if you are talking in terms of a days, it will be down for like 30 days. If you are talking in terms of hours, it will be down for 30 hours, or whatever the time frame you are using. So this is one of the way of using the candlestick psychology and volume. So now let's combine the moving average. But before I combine the moving averages, one more thing here. Exhaustion candle does not mean that the market will reverse from there. It just means that the market is facing it difficult to go up or down. It could be meaning that it is consolidating at some point. It may break above that range. It may go down from that range. You are not sure until that range is broken, either up or down. So please do not consider this psychology as a part of like reversal patterns or reversal trades. They are just there to make you understand what is going on in the market, what is going on between buyers and sellers. Now let's combine the moving averages here. This is the third part of the whole video and probably the last part. So let's start with the moving average now. the final part. So I've added exponential moving average with a period 9. So you can see that the exponential moving average with a period 9. So there is no other setting, it's a default setting. So what happens with a moving average? The normal tendency of a market is the market, if you are using any moving averages, if you are using 21, 9 or 50, market cannot go far from there. It has to come back to that moving average. So if the market is overextended for within a very short period of time, market will come back. So see here, market broke this moving average and it is going up, up, up. Now this can also be considered as a moving average. Let's forget this. Let's think about this. Market wanted to go up and went up. Now you see this is overextended. If you talk in terms of these some candles, this is an overextended and market is nowhere near to this moving average. Now what happened? See immediately the volume also here and see the candle here. So all these three combined, now what happened? Market retraced it back. It created some kind of range here and went up. So this is what is happening with a moving average. Now let's see one more example with a moving average. Again, the same scenario. I can actually show you two different scenarios here. So this market wanted to go down, and this is an exhaustion candle. This candle, these two candles, both candles can be considered as an exhaustion candle. But if you are in a downtrend, consider this as an exhaustion candle. Now notice the volume here. Volume is down, but the candle is huge, right? In terms of this candle, it is huge candle. And what happened after this? There's some kind of reversal pattern also generated. Now combine this with moving averages, market is overextended or far away from this moving average. Now what happened? Market immediately pulled it back towards the moving average. So this is the other way. Now let's take one more example, and the final example. Market overextended from the moving average. It was far away from the moving averages. And then what happened? It came back towards the moving average. So these are the three patterns, or these are the three ways to look at the candlestick exhaustion patterns and have an understanding in an exhaustion candle. So that's it about this video. And I know that I may have confused a lot of you, and you can always put your queries in the comment section so that I can maybe make a part 2 of this video, or probably I can answer those questions in the comment section itself. So if you are still unsure of the exhaustion candle, let me know. I can make a more detailed video. There are few other concepts of the exhaustion candle that maybe you can take those things into consideration also. So, but these are the three basic patterns, or the basic things, or the basic understanding that you need to understand the exhaustion candle: candlestick psychology, volume, and moving averages. There's nothing apart from these three. So that's it about this video. I hope you guys like and share this video, and if you're new to the channel, consider subscribing. Thank you.